Welcome to Human Risk, a podcast dedicated to the understanding of human behavior as a risk. Here's your host, Christian Hunt.
Welcome to a very special edition of the Human Risk podcast. And I'm delighted to say that I'm joined by a co-host. His name is Tom Hardin. And if you listen to the second episode, you'll know all about Tom's story. Welcome to the podcast, Tom.
Thanks for having me back, Christian. Today, we'll be looking at a few stories from the news that we found interesting and seeing what we can learn from them. We'll look at three today. The first, which is WeWork, the office space provider that had to pull its stock market listing in the U.S. after investor backlash.
And then when we've done that, I want to cover marathon cheating, which is something I keep reading about in the press.
And we'll finish up with insider dealing. There was a big case in the U.S. and Europe in the past week. Insider dealing is back.
Like it ever went away, Tom.
That's right. That's right.
So shall we get started with WeWork? Tell us about that and let's see what we can discover.
Absolutely. So the co-working venture WeWork went from unicorn darling with almost a $50 billion valuation to start the year to a cautionary tale for investors worth just about $8 billion when October 23rd, SoftBank, the majority investor, came in and agreed to rescue the embattled company with billions in additional capital in exchange for increasing its ownership stake to 80%. The deal pushed out 40-year-old CEO Adam Neumann, who was this sort of tall, long-haired, barefoot, sort of weed-smoking, tequila-drinking type of CEO of We, the real estate company that dropped work from its name after it bought the copyright for the word we from the CEO Adam Neumann himself, who will also get $1.7 billion between stock he sold to SoftBank, a consulting fee, and a line of credit to pay back loans to investment banks, despite burning through all the earlier investments from his investors. Neumann had been selling a vision of wrapping its real estate sublet business in the cloak of a tech startup destined to, quote, change the world, well beyond office space sharing and real estate. So, Christian, one thing that stands out to me with all of this over the last 2 months is some of the more skeptical sections of the financial press have been on the WeWork now for a few years. I was looking back October 2015. BuzzFeed had an article about WeWork, some of the documents that were sent to private investors about how expensive this business was with little path to profitability. And you can search 2 years ago, October 2017, the Wall Street Journal had an article, a $20 billion startup fueled by Silicon Valley pixie dust. So I guess it doesn't matter until it matters, until the last couple of months or so, where WeWork eventually saw its company valuation drastically reset.
This is amazing, right? So you have this business, which any listener who's in a large city, I'm guessing pretty much anywhere on the globe,
right,
is going to have one or two, or in the case of London, I think it's 42, and then New York's got even more than that in the city. So these things are about as common as Starbucks in some respects.
Right.
And so there's these huge things. And I'm struggling a little bit because on the one hand, they are, from a customer perspective, they sound amazing, right? So you can rent office space on a very flexible basis. There's all sorts of things like free coffee and beer and food and all kinds of things. And so it strikes me as being a very 21st century model that's actually, from a customer's perspective, pretty amazing. But from a business perspective, it's insane. The guy's getting paid huge amounts of money for setting something up that is, in essence, not a profitable business. It takes long-term leases that it has to invest in. And then it's got customers on short-term leases. So talk about a mismatch that we've seen cause problems for financial services before. You have a load of banks backing this thing to float this unprofitable business. And the only thing that derails this is a load of PR that comes out of the disclosures they have to make because they're listing the company.
That's right. It's interesting. In most regards, there's nothing dramatically different about this business model, as you said. Like many other businesses before it, WeWork leases property and then subleases the property to tenants, and they hope that the rent they collect from the tenants covers their costs. So this isn't 21st century transformational business. However, as you pointed out, they had a huge amount of capital and they didn't really have to worry about making a profit. This means they were able to set up these great offices, making those of incumbent office providers look really dated and bland while charging lower rental rates with less commitment from their tenants. So we look at this, and many property sector experts said it wasn't going to work. And it was just interesting when they filed to go public August 14th, how all these red flags that have been highlighted over the last couple of years started to matter as investors and the public world were going through their documents. And it's very interesting that the whole thing reset before the actual IPO happened. So at least the retail investors were not plugged with this at this $47 billion valuation, that it was able to reset as people came out, started questioning the red flags. and some of the conflicts of interest in the document that the SEC obviously has every company in the U.S. Provide when they're listed, and was reset, and SoftBank came back in to actually bail them out before it was ever plugged through an IPO. So at least something better like that happened than actually sticking it to the retail investor.
I find it absolutely astonishing, right? So the cover, if you like, is blown on this scheme, shall we call it?
Sure.
At the point at which they publish the document. But to publish this document to list the company, it has gone through a whole host of reviews by investors, by the banks supporting it, by lawyers to get it to the point where they publish this stuff. Now, I find it astonishing that anybody would think to bring something to the stock market that had this many red flags on it. And it was obvious from the reaction that it wasn't going down particularly well. But this isn't just sort of something that has kind of come to light because people in the public domain are more aware of this stuff. There are banks behind this thing and advisors behind this thing and investors behind this thing who have invested and supported something that frankly doesn't stack up by any stretch of the imagination. And you talked about conflicts of interest. I mean, the amount of money that Adam Neumann was being paid and got paid to exit the business is insane. There was something about his wife was going to be able to appoint his successor in situations where something happened to him. I mean, this has all of the hallmarks of a really badly run family company, except the difference is it wasn't a family company. It had loads of other people investing in it. And I'm probably being really unfair on the average family company that at least thinks about family reputation before it goes down the route of doing something like this. So I do not understand how this was allowed to happen.
As I was reading everything coming out, Christian, I was thinking about these drafting sessions with the bankers and the lawyers all sitting in this room, pulling these all-nighters, putting together this document, how one person in the room didn't look around and say, hey, there's a lot of red flags here. We're losing a ton of money. We're projecting the size of the market as $3 trillion. So WeWork was counting anyone who worked at a desk in the U.S. where there was a WeWork as a potential member. And then outside the U.S. with countries that have WeWorks, they estimated the market as anybody with an office job was a potential person in the market. So how one person in these meetings, to your point, didn't raise their hand and say, this doesn't make sense. And it got me thinking about maybe the bystander effect, where if I'm in the room, I see something, I'm not going to say anything if nobody else says anything, if that might have played a part in it. I mean, I'm just speculating, not being in that room, obviously, but maybe the bystander effect could have played a part. I'm not going to put my hand up if nobody else is. That was just one thought I had reading through all this.
That makes a lot of sense. And ages and ages ago, I worked in a department where I was doing that kind of thing. And you're right, these documents get written at bizarre times of the night, and there's a lot of pressure to get out the door and a lot of drama, I think, to be honest. And I would say that that's not necessarily the most effective working methods if you want people to be on top form and thinking about issues. But it's clear that somebody somewhere must have taken the decision within the banks and within the investors that put money into this thing in the first place to look at it and go, this looks like a good investment. And then you get to the point where you are required by the SEC to tell everybody else what the risks are that they might be running. And you're sort of, you're confronted with it. It's not like somebody amazingly did some reviews and discovered something that wasn't obvious. You have written this stuff down and disclosed it because you have to, and yet you still thought it was a good idea to proceed with it. I mean, I'm taken back to the kind of late 90s, the first internet boom, where there were loads of companies being pushed into the stock exchange who, frankly had questionable business models. Now, some of them have survived, but the large majority that were either up for flotation or made it onto the markets aren't around nowadays. And if they are, their business models have fundamentally changed. I'm astonished that literally 10 years later, within living memory, we're seeing something else. And the bit that really surprises me is it's the same dynamics that you're seeing with technology-based companies. So Uber as a good example, but it's a physical business. So it doesn't even have that kind of stardust of the technology thing. I could sort of understand it, but this is a physical business that you can compare to other physical businesses. It's not a unique proposition in a way that, say, Uber might arguably have been.
That's right. It's not even anything, I could see it with a software business where they lose money, up front, but of course they have such high margins, the VCs are going to invest in that and see that grow. This is a physical business. And it's interesting what's happened kind of since August, since they filed these documents. It wasn't the consequence of maybe the investigative journalism that we saw, uncover Theranos. It was just something, when they filed the paperwork, all the risk factors were out there. A lot of this was already known. And I guess it was re-aired and maybe a new climate And what we saw now, maybe it sounded almost amusing in these articles from a few years ago that I referenced earlier, was now horrifying, I guess, to people. And so that's where kind of the downfall, happened the last couple of weeks.
But we just don't seem to learn any lessons, right? A lot of these things is just repeat performance from yesteryear. And it's astonishing insight into human psychology that we sort of allow these things to happen. And as you say, I think the bystander effect is a really interesting piece, which is kind of like, well, if everybody else thinks it's okay, then who am I to call this stuff out? And maybe you could actually, to carry your bystander analogy thing further, maybe you could say to yourself, well, actually, look, we must have learned from experience, right? So the reason I don't need to intervene is that sharper heads, brighter minds have prevailed on this one, and I'm dumb. I'm missing something here. So I've got possibly, ironically, even more of a reason to conclude that it must be okay.
Yes. One of the main four investors was the most prestigious venture capital firm in Silicon Valley, who had just made over 100 times or more on their Uber investment, before that IPO. So I think they're involved in this. You might second guess yourself, well, they must know something I don't, or they must know how this is going to play out to one day be a $100 billion company, which is what the internal talk was. And one of the bankers pitched them on the ultimate valuation. So that perhaps played a large part in people not saying anything. And I guess as long as the valuation is going up, then you don't put your hand up. It's when things take a turn like they have the past month where things crumble.
Right. And I guess there's also this fear of missing out, right? Is if your institution isn't investing in it, or if your bank isn't promoting this thing, someone else is going to. And then to protect yourself, you probably go, well, if we don't do it, that other firm will do it. So I can almost concoct an argument that says, I'll be in trouble if we don't participate in this thing when we had the opportunity, because we'll see those people over there be successful. And therefore this FOMO, fear of missing out, probably plays a part as well.
And one final point, just sort of a special situation here. The lead investor, SoftBank Fund's Vision Fund, run by Masayoshi's son, or Masa, he was a very idiosyncratic guy. And at one point, he told Adam Newman, the CEO, who's also very idiosyncratic, just to be crazier. And I think that it fueled a lot of this. And so in the last two rounds, SoftBank's Vision Fund was setting the valuation all the way up to $47 billion. In this round a couple of weeks ago, resetting the valuation to $8 billion. SoftBank, the corporate company with public shareholders, was the one that came in. So the Vision Fund, the limited partners, where the Saudi money came in and were limited partners in the Vision Fund, but it was actually SoftBank, the company, who now is coming in and buying it at this much lower valuation. So there's another conflict of interest. So this is a whole hodgepodge of conflicts of interest everywhere.
It's an amazing story, and I have no doubt one we'll be coming back to.
Absolutely.
Should we move on and talk about cheating?
Let's do it.
So there's been a lot of stories about cheating in marathons. And I know that you, when you were getting your life back together, took up running. And so I'm kind of looking for some insight here. But there seems to be this thing of people cheating in marathons. And there's websites that investigate this stuff because it's so commonplace. And the latest one I read was somebody used a bicycle to cut some of the course out. And I can't get my head around why you would even think about doing this. So can you help explain this?
Yeah, and I think it helps. And in some of these examples we'll probably look at going forward, there might be what we could call a continuum of cheating. So on one end, it may start where you show up for a race, and perhaps the race is 12 loops. Maybe it's a marathon you run 12 loops. You show up, you don't plan to cheat. You finish your 11th loop, you're coming in, your friends and family are clapping. The race director thinks it's your last lap. He's about to put the medal on you. Your legs are shot. You do want to stop. Would you take that medal and say your race is over and claim to have finished the race? So that's one situation where maybe then if you're called out later, yes, I did cheat. I shouldn't have taken the medal. You'd own up to it. All the way to the other side. The example you just used, some of the stories out there with the Disney marathon where families are actually taking the monorails to the end to finish the marathon.
I mean, it's kind of funny, right? Yeah. But it's shocking in a way.
It's interesting. There was a doctor who did this over 10 years. He cheated. He put all the race medals up behind his desk in his doctor's office. When his patients would come in who were also runners who he was targeting, they could see his medals, and they were all fake achievements. So I don't know how you could do it for years and years and years, cheat, put the medals up, and you have to walk by that every day. Is there something in the sort of behavioral science behind this, or how somebody could see this every day and know that they're living a lie?
As you were talking about that, I was thinking that's a profession where medical ethics are very important. And so you walk into the surgery and you sort of expect them to behave ethically because you're quite vulnerable as a patient. And so I kind of think that profession has, the Hippocratic Oath being a really good example of how the medical profession values ethics. Right. And yet you're putting this stuff up. I mean, my guess is once you've started doing it, that you put one up, then putting 2, 3, 4, 5, 6, or however many it was probably doesn't become that difficult. And I guess it's a really hard lie to unwind because you're presumably putting it up there so people talk to you.
Absolutely. And, in my talk, I say once you do it once and you're not reprimanded, you're not caught, it becomes easy to do it again. And I think that pattern of behavior, to your point, probably applies a lot of this, especially to people who have done it year after year. And, we could talk about the Mexico City Marathon too, which is pretty amazing. So it's been notorious for cheaters from 2013 to 2018, that 6-year period. The finishing medals were the letters of the word Mexico. So if you ran the race 6 years in a row, you collected all 6 letters in the word Mexico. And as we got to 2017 and 2018, cheating was rampant. I think it was over 5,000 people cheated to cut the course. And the way you see it in the marathon is there's timing mats. So you have to pass these mats at certain points in the race so people can see and track you. If you're tracking a friend, you follow them along. The timing mats were skipped in the middle. The timing mats were hit in the end. So people were cheating. Thousands of people cheated, were called out by the investigators in this Mexico City Marathon. 2018 was the last year to get the letter O in the 6 letters. They thought, okay, this year cheating would be down. But as the website marathoninvestigation.com pointed out a few months ago, the individual Derek who runs the website figured out perhaps 2,000 people again cheated in 2019. So it didn't really knock it down too much.
Yeah, it's interesting. So I could see the logic if you got to Mexic and you wanted your O. To finish it, a bit like kind of kids do collecting. So I can sort of see the logic, but that's fascinating. And then, I mean, you mentioned to me the other day that you've heard of people getting other people to run qualifying races for them so they could get into things where there was an entry threshold. I hasten to add, we were discussing it in general terms, not because anyone's dared approach you, which I think would possibly be the most dumb strategy in the world.
I have to go and are sharper than 10 years ago.
Can you put yourself into the shoes of someone that would think that was sensible? Because my gut reaction tells me, right, if there's an entry requirement and you cheat your way in by getting someone else to do it for you, then you're going to get busted because presumably if you need someone else to do it for you, you won't make the grade. And therefore you'll either fail at the race or you'll have a time of the race that would suggest that you shouldn't have been there in the first place.
Yeah. And the specific marathon where there's qualifying times in the States is the Boston Marathon. That's sort of the top tier race for the amateur marathoner. Like myself a few years ago when I was training to run, a 3-hour marathon, had somebody approach me to run. So what happens is you have to actually run a qualifying time to qualify for the Boston Marathon. So the way they catch cheaters here is maybe somebody runs a 2-hour half marathon legitimately, and then a few weeks later, their name shows up in a qualifying race for Boston, having run a 3-hour marathon. So there's absolutely no way to do that. If you're truthfully running, if your fitness level is a 2-hour half marathon, there's no way you can run a 3-hour marathon. Right. When that shows up, that's pretty easy for the Boston Marathon organizers to figure out that there's cheating there. But there are situations where people will take cash, faster amateur runners like I was, run the 3-hour marathon so that person could qualify. But again, the problem with lying and cheating is you're eventually going to get found out in these situations. And how do you keep covering it up and covering your tracks?
Yeah, it's weird, but I think it's just a very, very good example of sort of people don't, and this is highlighted in all the things that you say, there's a kind of presumption of not getting caught because presumably if you thought you were going to get caught, you would weigh up those consequences. And the likelihood, given everything is electronically tracked, is incredibly high. I am not the most athletic individual. And if I've read about this stuff, and okay, I have a penchant for sniffing out interesting stories about human endeavor, but you would think these people would reflect on that and go, there is no point in even trying this because it's going to unwind at some point, and that's going to be more unpleasant than the short-term burst I might get from being able to falsely claim that I've achieved this.
Absolutely. And I think today a lot of social media has a lot to do with this potentially. People want to post on their Facebook and their Instagram with the big finishing medal around their neck to get the likes, to get the endorsement of their friends, even though when they didn't, when they're cheating and not finishing the races. One thing that the owner of marathoninvestigation.com talks about when he catches people, he says he can catch people every week. Every weekend, he looks at the races. He can figure out who cut the course and that type of thing. Who do you call out? Some of these people may have mental illness. And so he's more thoughtful probably than a lot of people would be in terms of calling people out when they cheated. Is it worse if you might be the 5,000th finisher in the race, you cheat, you cut a few miles, and then you finish 4,000th? Is that worse than somebody who cheats to actually get a top 3 finish in the race and actually get cash? I mean, to my mind, cheating is cheating, but some people look at that differently. I'm not sure where you draw the lines on how bad the cheating has to be. but that's something that's come up in some of the discussion around this.
Interesting stuff. You want to talk to us about insider dealing?
Insider trading, as we said, it's back, although it's never really gone away. But this was sort of a bigger case that came out in the States last week involving a couple of U.S. investment bankers, one U.S. investment banker, a Greek restaurant owner, and two investment bankers in London. The investment bankers were tipping information to intermediaries who were then passing it on to the Greek restaurant owner and another poker playing trader in Monaco, as well as a pharmaceutical company board member who were all trading in their personal accounts, making millions of dollars. The bankers were actually getting cash kickbacks for their tips. So the classic bribing, there were prepaid cell phones, cash bribes. Two of the bankers in London had code names Pops and Popsy. So it had all the elements of a sort of made for TV type a ring. But actually it was a very simple ring. It was just a couple of bankers tipping intermediaries who were passing it on down the stream. So again, now that we know, especially in the States, how well this is fleshed out, caught, and prosecuted, why these individuals who were all aged between 32 and 35, not young, but I guess not like mid-career, why they thought that they would get away with it.
There's so many elements of this that fascinate me. I mean, one, your case wasn't exactly quiet, so this isn't like nobody's ever been caught.
Yeah.
If we look at the time gap between, and this has been going on for ages, right? But if you look at the gap between what they were able to do in your case and what they're able to do now, we just know it from our own personal technology that we can do a hell of a lot more. So you can bet they're much better at doing this stuff than they ever have been before. So again, it's one of these situations where the likelihood of getting caught is massive. And they seem to have been particularly dumb, as you say, because I think there were burner phones involved and a whole load of other things. Right?
Burner phones, cash payoffs. Popsy was a female banker in London. She emailed her former boyfriend, who went by the code name Pops at another bank. She said something along the lines as Popsy is on the sniff for the truffles or something like that, which is obviously code language. But then she sent her clients illicit, inside information, proprietary information in the email that had the code language. So having done it before, that's not how you do it. But again, it's amazing that in 2019, this behavior is still happening. So
and there's something I just don't understand about this, right? Which is all of these things always seem to be done by groups of people. There seem to be gangs or rings or whatever you want to call them, right? And what fascinates me about that, if you think about things like the French Resistance, right? They were very careful the way they planned things to make sure that if one part of the cell was compromised, you didn't take the whole thing down. And there seems to be this kind of getting lots of people together, sharing information. Now, I can see the benefits in terms of maybe that gives you access to more information, but it seems to me to be massively risky to involve a whole load of people, particularly when you're talking about the sorts of, as you say, it's a movie thing where you've got a restaurant owner and you've got someone else and you've got the couple. And I mean, it's almost sort of stereotypical, diverse range of people. I'm fascinated. What is the logic, based on what you've seen of these people getting together in a group? It doesn't seem to me to make any sense at all. Increases the risk massively.
Absolutely. And I can obviously speak from my own experience. When you bring more people into a situation like this, you actually may feel like you're being altruistic, which is a weird way to look at helping somebody else out. But there's a term from Professor Gino at Harvard Business School. She wrote a paper talking about self-serving altruism, which is what I read when I started putting together, my own personal experience as a talk. When you go out and help people you like and bring them into maybe illicit behavior like this, you start to feel less poorly about it because more people in the group are doing it. I don't know, I can't speak for the people involved in these cases, but reading that's the only thing I can hang my hat on in terms as why they may have felt by bringing more people in that they didn't feel as bad about it or thought they might not get caught. I mean, that's the only thing I could guess.
I suppose if you kind of need to unburden yourself, I guess, of this thing. And if you're the couple, fine, they've kind of got each other. I'm guessing everybody else needs somewhere to go. And I was very struck that when you and I were having a conversation, when we talked about your situation, the difficulty of sharing this stuff with other people, in a way, it seems is strangely at odds with the willingness to do it. Because you kind of, it's a tough conversation to have. So you kind of know, why is it a tough conversation to have? Well, probably because it's not something I want to be talking about. Right. On the other hand, you sort of need that outlet.
Yeah, no, absolutely. That was, for me, and it looks like in this case, bringing other people in, how it started small and it spread. You have that outlet, you have other people engaging the behavior, maybe even people you think highly of are willing to go ahead and cross these lines. And then it escalates. the FBI, the indictment reads, burning cell phone burners and cash payoffs. So then it obviously escalates to extremely nefarious behavior. So,
and it's interesting as well when you think about it, right? Because most firms now are monitoring this stuff, right? And if you don't know that you're being monitored and you're in that environment, you've either not paid attention,
right,
or you've somehow decided that the IT system, and I kind of get it because some banks' IT systems are terrible from a kind of end user perspective, but you're kind of assuming that they won't find you because they're too dumb or their technology is not good enough. And clearly, the real criminals here are the people that would do it. You do it off the reservation. Don't do it in a place where you can be observed, exactly. Which they sort of know with the burner phone piece. But there seems to be this kind of willful blindness to the fact that you're being watched.
Yes, I think you're right, especially that email where Popsy, the female banker in London, was using this code language and then actually attaching the confidential information in her email so her boyfriend could trade on. She's not either go offline and try not to get caught, but if you're gonna get caught if you're using approved email communication channels. That's the end of the day. So that wasn't too hard, type of thing to look at, I'm sure, for the enforcement authorities.
Look, I think after that discussion, Tom, we need something to give people a sense of positivity. So why don't we close this conversation out with a couple of recommendations of things that people can either read or watch to distract them from the woes of the world?
Absolutely. And I hate to not be positive, but my book I was reading this week is called Lying. So it's a long form essay from a gentleman named Sam Harris, who's, if people don't know him, he's an author, he's a neuroscientist. He has 7 books, I believe. One book that I read called Lying is basically a long form essay. It's about just over 100 pages. It's actually, I believe the book's 8 years old, so it's been around a while now. And he really talks about, lying as one of those things that everybody does. Most people wouldn't readily admit to doing it. Sometimes we view lies as being extremely useful. If you're trying to blame the loss of your homework on your dog, or if a friend says, do I look fat in this dress? You just sort of tell them a lie to make them feel better, trying not to tell the truth. But he argues even these small white lies are a problem, because even as one individual telling these tiniest of lies, it kind of normalizes the system of untruths that are out there. And he wrote this book in 2011. I was thinking, wow, in the last 8 years, the system of untruths has only gotten worse, I think, in the world. So just making the point that even these small white lies, you should really tell the truth. And I think it's easy to say tell the truth. But in some of these situations, I was starting to think about, if I have a relationship with the person, if it's a spouse or a good friend, I guess I really should tell the truth, even if it means pulling off the Band-Aid and leading to something kind of like a difficult conversation, or, the person might be confrontational if you tell the truth. But what if it's somebody in your life, and this wasn't addressed in the book, that you really want to get out of your life, or it's somebody that you really don't want to care about and care not to see again, and a little white lie, if you tell them something, yes, you look fine in that sweater or that type of thing, will just get them to move on. So I didn't finish the book saying I'd never tell a white lie again. I just got me more thinking about situations where it might be most difficult to do that. So
interesting book. And then I would add to that, there's a great movie called The Invention of Lying, which stars Ricky Gervais, which is this world where no one lies, and he suddenly discovers that that it's possible. And so he's the only person in the world lying. And I think that sort of sits nicely with that. It's questioning this piece where we can justify, on the one hand, it's, there are some times where it is probably you don't want to hurt someone's feelings. You do it for all the right reasons, through to it's very nefarious and unhelpful. And where's the line between those two things? So that sounds like a fascinating insight.
That's what Sam talked about. He offered some examples of sort of a middle ground. If somebody says, does this sweater make me look fat? You could just say, well, you look the same as you did a year ago, and not answer the question. So which
it depends on whether they've lost loads of weight, right?
Right, exactly.
Give me the most insulting comment ever.
Sorry, I
like the idea.
Yeah.
I like the idea.
What do you have this week, Christian?
So I've got it's a Netflix. I was going to say movie because I watched it in one go, as one tends to do with Netflix things that are good. Yeah. But I think it's a 6-part thing called The Spy. And it stars Sacha Baron Cohen, who people may know as Borat and various other comedy characters. But this is a serious bit of drama where you have an Israeli who goes undercover and is required to sort of role play and goes on a sort of major spying expedition in Syria. So it's not set recently. It's set back in the sort of post Second World War era. And it's beautifully produced and shot, very fascinating. But two, the human psychology there of this double life that he has to lead, the challenges of maintaining a front, and of course the character that he's acting, the person he's pretending to be, has very high stakes, because if they catch him, he's going to get killed. And so he needs to maintain this thing. But what of course that does is it bleeds in. It stops becoming acting and starts becoming who he is. And so for me, on a number of levels, fascinating watch, but also just a really interesting psychological piece. And you sort of sit there and he goes through a journey that I think is akin to many of the things that we've talked about. So The Spy on Netflix, highly recommended.
Great. Yeah, I've teed that up for my next Netflix binge. And it seems like from what I've read, the show really does follow the true story of the individual, in real life. Just reading about his story now.
Yeah, there are some incidents that are a little bit far-fetched, as
right.
as they always have with these things. And I think there's a tiny bit of sort of playing with chronology to get those, those Netflix tensions that you need to make you want to watch the next one, and then it automatically counts down, and before you know it, you're in the next episode. So those right. I think there's some of those things that are a little bit far-fetched, but it does appear to be based on some truth, and it's got some sort of terrific acting and engagement in it. So that's my kind of strong recommendation for people to watch.
Very good.
That's it for another Human Risk podcast. My massive thanks to Tom for co-hosting, and my thanks to you for listening to this podcast. If you're not already subscribed to it, then you can find it wherever you normally get your podcasts. And if you like this content, then do also check out the Human Risk newsletter and the YouTube channel. You can find details of both of those at human-risk.com. If you want to find out more about Tom, do go to his website, which is tipperx.com. That's TIPPERX.com. But in the meantime, thanks for listening, and I'll see you on another Human Risk podcast very soon.